Now, to give us his take on how the TDSR has made an impact on the residential property market, we're joined now by Getty Goh of research consultancy firm Ascendant Assets. Getty, welcome.
Well, thanks for having me.
Right, Getty, it's been a year since the TDSR was actually put into place. Prices have come down, but would you say that it's actually something that, the market's actually comfortable with that level?
Well, I think as of now, there's definitely still some more room to come down. We are not really seeing any indications of buyers jumping in, so which seems to suggest that the activity is still expected to be muted for some time.
Now, how has the TDSR actually affected the way developers market their developments? And do you think that taking a longer time to actually approve these loans will help to ensure a more sustainable market?
Well, I don't think the banks are intentionally taking a longer time to approve these loans, but I think it's a function of the government coming up with various regulations and trying to make sure that people who cannot afford it do not overstretch themselves. I think that is the key thing that we should take away from this. Ultimately, with all these measures, yes, although it has put a damper on market activity, I think it is ultimately meant to promote more responsible buying as opposed to while speculating.
Mm-hmm. Be that as it may, Getty, developers have been calling on the government to actually roll back some of those many rounds of property cooling measures. Where do you think the prices, must be before the government actually acts?
Well, I think that is the million-dollar question. But if I were to just put some perspective into things, I think it's common knowledge that properties are meant to be hedged against inflation. So in other words, if they go within a tight range of between, or say, 1 to 4% price fluctuation annually, I think it's still within a fairly comfortable range. Now, if prices were to drop more than that in a short period of time, then I would say it probably warrants some serious looking into in terms of lifting of measures. So I would say right now, if you look at the past few quarters, it just came down by, say, slightly over 1%. So I think in the bigger scheme of things, we're still fairly healthy. Yeah.
Getty, let's get your thoughts on government land sales so far. Where do you think that, what do you think that tells you about where the residential segment is heading towards?
Well, I think clearly it shows that developers are currently a bit more conservative, and I think it reflects in terms of what the government is doing in terms of the government land sales. And I think it is quite clear based on the last few rounds of tenders, prices are not as high as it used to be. And I think let's take a look at what developers are doing. Say Sky Habitat, when it was first launched, it was going for, say, 1,005, 1,006. Now it has come down to about 1,002, 1,003 in terms of what the developers are relaunching. So I think it is very, very telling. And if we were to extrapolate this and try to do some intelligent forecasting, I would say some form of reservation has set in, and I think that is likely to be what's going to happen moving forward.
Right. That drop-off in prices, Getty, you mentioned, 1+%. It's gone up to about, 2% in some cases. Some analysts actually had anticipated that we'd see a cooling of between 6 to 10%. Some even said 15%. What's your take? How far are they going to cool?
Well, I think, once again, to put things into perspective, I think they are looking at really the past trends, because when the market was very, very badly hit, such as during the SARS, such as during the global financial crisis, prices have indeed come down by as much as, say, 20 to 30% within a very short period of time. So I think they are probably looking at that extreme situation, and I think so I can understand where they are coming from. However, all things considered, the fact of the matter is right now they're still buying. There's still a lot of buying interest. However, things like valuation, the high valuation is not going through. Things like loans, they're not going through. So it is not really fair to say that there's no buying interest, but it is a matter of, well, there are buying interests, a lot of these loans they're not going through, a lot of these valuations they're not going through, and I think that is really what that is a result of TDSR. That is a result of the government's intention in terms of cooling the market and reinforcing prudent property buy.
All right, thanks very much.
Thanks for having
those
me.
comments, Getty. That was Getty Goh there of research consultancy firm Ascendant Assets.